Welcome to Multibagger Shares. I am Manish Goel, and today we discuss the most important topic for Indian investors right now. Trump tariffs impact on the Indian stock market in 2026. With US tariffs at 26% on Indian imports, the RBI holding rates steady, and massive fee selling, millions of investors are confused. But smart investors see opportunity where others see chaos. Let's break it all down. First, let us understand what happened. The United States imposed a 26% reciprocal tariff on Indian imports, which was later negotiated down to 18%. Sectors like pharma, textiles, gems and jewelry, and auto components are most exposed because over 30% of India's exports in these categories go to the US market. However, companies focused on domestic consumption and niche manufacturing remain largely insulated. This is why you need to research individual businesses deeply rather than blindly buying index funds. On April 8, 2026, the RBI kept the repo rate unchanged at 5.25%. Many investors were hoping for a rate cut, but with Brent crude above $100 per barrel and the rupee weak, the RBI chose caution. Rate-sensitive sectors like banking, real estate, and auto may consolidate in the short term. But here is the critical insight. The best time to buy quality businesses is when sentiment is uncertain, not when everything is rosy and prices are already high. Foreign investors sold a massive 8,167 crore rupees in a single session. But here is what the media does not tell you. Domestic institutional investors bought 8,088 crore rupees in the same session, almost perfectly absorbing the fee selling. When foreign money leaves and domestic money stays, it creates a unique window of opportunity. The stocks that FIIs dump in panic are often the very ones that create multi-year wealth for patient investors. Let me give you a real example of what deep research and conviction can achieve. While the broader market crashed and recovered repeatedly, Titan Biotech delivered extraordinary results. The share price surged over 326% in just 1 year. Net profit jumped 94% year-on-year. Sales rose 47%. Market cap increased over 431%. These are not speculative numbers. They reflect genuine business growth. This is what happens when you invest with conviction in deeply researched businesses instead of gambling in F&O. SEBI data consistently shows that approximately 90% of F&O traders lose money during volatile markets like this April 2026 correction. F&O losses accelerate because leverage amplifies both fear and bad decisions. Instead of gambling in futures and options trying to time the tariff impact, do what the greatest investors do. Buy quality businesses at discounted prices and hold them with conviction. Warren Buffett said, "Wide diversification is only required when investors do not understand what they are doing." The wealthiest investors, Buffett, Munger, Pabrai, Jhunjhunwala, all built their fortunes through concentrated portfolios of deeply researched businesses. They invested in their best 5 to 10 ideas with full conviction. At multibaggershares.com, we teach you our 95-factor analysis framework to identify true multibagger opportunities. Real risk management comes from depth of understanding, not from spreading your money thin across 50 mediocre stocks. Here is your 5-step action plan. Step 1. Stop watching financial news every 5 minutes. Daily noise causes emotional decisions. Step 2. Review your portfolio for US export exposure. Step 3. Build a watch list of quality businesses trading at fair prices during this correction. Step 4. Absolutely avoid F&O trading during volatility. And step 5. Invest in your own education. Watch our complete free stock market course on YouTube. Link is in the description. Despite tariff headlines, India's fundamental growth drivers have not changed. Government infrastructure spending continues at record levels. The Make in India manufacturing push is accelerating. Domestic consumption from 1.4 billion people remains robust. Companies in niche sectors like biotech, specialty chemicals, and digital infrastructure will continue to grow regardless of what happens in Washington. The April 2026 correction is temporary. The wealth building opportunity it creates for patient, informed investors is permanent. Thank you for watching. Visit multibaggershares.com for deep stock analysis and our 95-factor framework. Watch our complete free stock market education course. Link in the description. Like this video, share it with fellow investors, and subscribe to our channel for weekly market insights. Remember, quality research beats market panic every single time. This is Manish Goel from Multibagger Shares. Happy investing.